ticker symbol RAISE has returned an impressive 66% over the past year, and today we'll be looking at the highest quality automotive company there is in the stock market, and why TipRanks has actually rated the stock an 8 outperform based on a moderate buy from analyst consensus and an increased hedge fund trends. So today we'll be looking at Ferrari, the sports car company. On their annual report, Ferrari says that they're focused on the design, engineering, production, and sale of the world's most recognizable luxury performance sports car, and they actually sold and shipped around 13,663 cars in 2023. They divide their regions into 4, the first one being EMEA, which is Europe, Middle East, and Africa, then the Americas, China, and the rest of Asia Pacific. Well, the MEA represented around 44% of their sales, the Americas 28%, China 11%, and the rest of Asia Pacific 17% of the units that they shipped in 2023. And they divide their offerings into 3 different categories. The first one being Ferrari cars, which is just their main operations of selling these beautiful cars. Then the second one is Scuderia Ferrari, which is their Formula One team. And then finally, the parks and merchandise. Because if you didn't know, Ferrari actually has theme parks, and one of their main incomes is all their merchandise that they sell, whether it's hats, whether it's collectibles, or any other thing that you might imagine that has a Ferrari logo on it. And one thing that I did not know that Ferrari offered is a full car personalization for the most demanding clients. So a very rich client can go to Ferrari and say, I want a car like this, this, and this, and they will build it from the scratch up. Ferrari has one of the greatest financial analysis when comparing against its automotive peers, with a return on capital employed of 16%, which is extremely solid, an interest coverage ratio of 9 times, which we usually want to see above 10 times. However, it's really close and we'll accept it since the other metrics look extremely fine. They have a very solid cash conversion of 137%, and this ratio basically shows how well the company is converting their net income into free cash flow, which is what us investors will receive at the end. They have an all-right profit margin of 27%. It's kind of low. However, their operating margin makes up for this since it's higher than the average, sitting at a 21%. And their revenue, operating income, and net income growth and expectations are beautiful. Look at the consistent growth of the 3 metrics with an extremely solid margins, which are the ones shown below. According to Alpha Spread, the gross margin is 50% and the net margin is 21%, which has been increasing over the past few years, something extremely impressive for a luxury company. And then in terms of financial analysis, this company is a monster at generating cash flows with 1.7 billion of operating cash flow every single year, which is extremely stable, and it's actually growing by 6%. Then the investing cash flow, they're investing heavily into their operations, investing around 870 million, and then they're repaying all their debt by 1.1 billion every single year. Here, the metrics that we want to look at are the return on invested capital and the return on capital employed, which are both extremely solid and way above the industry's average, with the return on invested capital sitting at 22% and the return on capital employed sitting at 27%. And finally, they do have a lot of interest that they're paying right now, and they're targeting this by paying back the interest, having a 1.1 billion negative financing cash flows, and their interest coverage is actually rising. According to Alpha Spread, it's not 9 times, it's actually 19 times, which would be a much safer ratio. And this company gets the perfect score with an 8 out of 8 ticks for their fundamental analysis, since they have low liability risk, a very solid balance sheet. And how do we decide this? Well, we always do if they're able to pay their short-term liabilities with their current assets. Their cash flows are extremely consistent, as we have seen, and although they do not pay a dividend, they do conduct share buybacks, which is very nice as it gives more value to the investor. Then, of course, they have incredible pricing power. They're the most recognizable luxury car brand in the world, and then they're funneling this to create organic free cash flow growth, which is deriving from their organic revenue growth. And finally, they have an extremely large moat and a very strong competitive advantage. Why? Just because of their name, Ferrari. This already tells you a story. This is the goal and objective that a lot of people out there have put for themselves, saying, okay, when I become successful, or my goal in life is to buy a Ferrari. And also, their Scuderia is one of the most recognizable teams, and I believe the best team in history for Formula One. And all the parks are already setting entry barriers for the different competitors if they want to get to Ferrari's level. I'm unsure about the growth potential of this company, however. They do not outline any strategies for ensuring their growth in their annual reports, and I would say that the main ones that we use are already being implemented, and it's difficult to implement those into a luxury business such as Ferrari. The first one being geographical expansion. However, this company is already present in all the regions it should be present in. And in terms of new offering development, they are already doing this every year with the release of new cars. Recently, they opened the parks, and the Scuderia Ferrari is reinventing itself year after year. Additionally, they're providing new and more collectionable merchandising for their fans and their customers, and it's working out really well. Now, in terms of valuation, sorry for this horrible draft, I could not find a better one, but this one shows that they're trading at a huge premium right now in 2024 compared to the rest of the market and compared to their average PE ratio. Now, don't get me wrong, this company deserves to be trading at a premium because it's perfect and its fundamentals are amazing. However, I believe that a PE ratio of 60 is incredible, and I don't think that even Netflix or other high growth companies such as Amazon are trading at those levels. And this goes in line with the free cash flow yield, which is sitting at 1.7%, a lot lower than the long-term inflation rate of 3%, insinuating that this company is trading at a very big premium. In terms of risks and possible challenges, I don't see the worsening of the competitive landscape actually being a big challenge for Ferrari because of the huge competitive advantage that they have and that we commented previously. Regulations, the only regulation that is affecting this company is they're reducing the emissions of the different cars. However, I believe that Ferrari has already launched hybrid and electric cars, which is tackling those kind of regulations, but I don't think that these will hurt a luxury car brand. And then in terms of performance, not meeting performance objectives, I would not be too worried since this company has been around for a long time and its management team is excellent. The main worry I have with investing in Ferrari is the chance for an economic downturn or the cyclicality risks that it brings. Because in the end of the day, its main sector is selling cars. And as we all know, selling cars is an extremely cyclical industry. However, the one thing that actually worries me less about this kind of risk is the fact that the cyclicality risks in the automotive industry is mainly due to the average consumer like you and me. Well, we have to buy normal cars. However, when you're talking about multimillionaires and them buying their toys or their luxury cars, I'm not sure whether this is affected in the same way and if it's cyclical as the rest of the industry. Before moving on to the investment conclusion, please remember I'm not a financial advisor and this is not financial advice, so please do your own due diligence. However, I believe that this company has a strong competitive advantage and it provides consistent, predictable, and growing cash flows, and it has a very high return on capital employed, meaning that its management knows exactly how to create value for the investor. So I believe this is a good company. However, it trades at a very high premium right now, and I believe it has high cyclicality. So thank you for watching. As always, this has been the Cashflow Compounder. Join the free Patreon for extra content, and there is a link in bio for a free stock if you join Trade Republic or Trading 212.